Monday, November 25th, 2024, Maneco 64, home of alternative economics and contrarian views. We're going to look at commodities today, the whole complex, not just gold and silver. And of course, gold and silver are monetary commodities. I would say maybe silver a little bit more of a hybrid. And I have a playlist entitled Commodities, a Bull Market, which I started compiling back in around 2019, I think. And the main reason I thought we are entering a secular bull market in commodities is that it's just a very cyclical market, and the previous top had been around 2008, 2009 or thereabouts. And yeah, things go up and down. And what we're going to look at today, this morning as well, is gold and silver, what happened to them overnight. Of course, I'm in the UK. I'm in London. It's just gone past 8 o'clock. And we've seen a massive kind of move in gold and silver. Maybe not so massive, but and we've also seen a big move initially up in the pound and the euro versus the dollar, which I thought was very strange. But we'll look at that as well. And yeah, and before I go further, just wanted to thank all of you for your interest in the channel. And if you watch me regularly, make sure you've subscribed to the channel as well. Make sure you hit that like button if you enjoy a particular video. So we're going to start right off the bat with a chart of the CRB index, Commodities Research Bureau index. It's a traditional way of measuring all commodities, gold, silver included, oil, all the agriculturals, all the base metals. And the thing about commodities is that they're very cyclical, especially the non-monetary commodities, because their stock to flow ratio is very low because they're consumed. Gold, of course, stock to flow ratio, which simply means how many years of supply are above ground. And with gold is hardly ever consumed. It is consumed a little bit for industrial use, but it's somewhere around 65, maybe even more years. Silver, of course, is less. And what that does, it doesn't, new supply of gold doesn't really affect the price that much. But when you have a bull market in commodities, gold and silver included, you kind of encourage investment in the sector. And when you get investment, you get more production, and you get more production, you get more supply. And eventually, after a few years, that supply starts coming into the market, and it affects prices, and prices start going down, and it repeats over time. So if we look here at the CRB at the beginning of the century, we made like a top there around 2001 or 2, and then it came down, and then it started going up again. It was a big leg up on the CRB from below 160 all the way almost up to 480, as I said, in 2008. And in 2008, of course, we also had the financial crisis, the world or global, as some people call it, financial crisis. And it led to a massive recession. They call it the Great Recession. Banks failed. People lost their homes. It was really bad. So there's less demand for commodities, so the prices went down, which is normal. It tried to go back up here when QE started, but it failed to make a new high, and I think that was 2011, just above 360. And it's been in a bear market, the CRB, really. ever since 2000 to 2008 top. And I started looking into commodities because I could see things turning in 2019. Gold was starting to pick up, silver, and I thought we could have a new leg, secular bull market in commodities. And as you saw here, the one in the beginning of the century, you could argue it even started just before 2000, and it lasted it lasted about 8 years. So of course we had the 2020 crisis, and when all markets crashed, I mean gold went from 1750 I think to 1450, fairly big correction. Silver went from around mid 20s or even 30, around 30, all the way down to 12 in March of 2020. But it was a very sharp and quick drop, a little bit like we had in the '08 crisis. And then, of course, we've rebounded again. And I think, yes, the secular bull market in commodities started in 2020. And let's say it's going to last another 8 years, just like the secular bull market from around 2000 lasted. So, well, that gives us 2028. So we still, in my opinion, have a lot of room and time for this to evolve. And of course, we've had, though, since around June 2022, we've had a consolidation. As you can see, it's formed a pennant, and this is a bullish. Usually, 3 out of 4 times, it's a bullish consolidation, and it results in the market breaking above the top line of the pennant there and doing pretty much the same distance that the first leg did. So we're very close there, as one can see. It's still not guaranteed, but I've also looked at the relative strength index and the moving average convergence divergence, or MACD. And the RSI seems to have still quite a bit of room on the upside. We're not even above the purple shaded area. We're turning up a little bit, and the MACD as well. Yes, it could go lower, but it's nowhere near where it's been at some other tops. So I think there's a lot of room for that. So this is the technical picture for the CRB and commodities in general. And it's interesting that the top in '08, if you count to 2020, that's 12 years. So we've had 12 years prior to 2020 where commodities were in the doldrums. So there's probably not as much investments in the sector as maybe we're seeing now. But I still think there's a lot of people out there who think everything's very frothy. And I kind of agree with them on the economy, that we could have a recession. I kind of agree that the stock markets are just keep melting up. But at the same time, I think the central banks and governments, they're not going to allow a big crisis to get going. And if they see first hint of a crisis, they're going to come in and rescue things. So what I'm trying to say here, I don't think we're going to have a 2008 style crisis, maybe a mini 2020 crisis, but they're going to come in and salvage things. And how do they do that? Well, more money printing by the central banks and more fiscal spending by treasuries. And I think that's what the market sees, and that's why I think commodities are such a steal here, and they're going to be the place to be relative to all the other paper assets, tech, AI, cryptos. And I think gold is leading the way. Usually gold leads the way. This chart here is a monthly chart. So it could be in the next month or two, maybe early next year, we could see the commodities complex breakout. Of course, there will be some commodities that don't rally at the same time, but generally speaking, I would say this is ready to take off. I guess oil, the oil sector is very important for this because oil makes a big part of the CRB index. So that's how I see it. I'm not telling you to go out there and invest in commodities. I'm just giving you my opinion. And if you do want to look into that, you should do your research. Yeah, there's a lot of ways of getting involved into commodities, not just ETFs, but oil companies or agricultural companies. I don't recommend futures and options in commodities. That's for the professional and for the speculators. And of course, I still believe gold and silver are going to be the place to be. So that's a way to play the commodities bull market. So I said I wanted to talk a little bit about gold and silver and what I saw last night. I'm in London, so the futures market, they open at 11 p.m. London, which is around, well, it is 6 p.m. Eastern time. And these futures, they're traded everywhere around the world, the CME futures. They're traded in Europe, they're traded in the Far East. And before I went to bed, I checked the prices and I saw, surprisingly, that the euro and the pound were up quite a bit. For example, right now, the pound is up slightly, 0.2% at 125.58, but it was up at 126.07, the high. And the euro as well got up to 105.02. We're now at 104.50. And I thought it really strange that you've seen such a big move in the FX market right after the open of the futures and the open of the FX market on a Sunday night. And why is that? Well, because usually when we open on a Sunday night, things are really quiet and they're not moving anywhere. And then I saw that gold was down slightly. And then this morning, I woke up like in the middle of the night and I looked and gold had been hammered and so had silver overnight from Sunday to Monday. And I thought, who'd want to do that? Especially in a week where the price of gold made new all-time highs in pounds and euros. Who'd want to go and sell into that on a weekend? Well, I think it can only be an institution that has the power to create money out of thin air. And how could the ECB, for example, and the Bank of England have done that even though they're closed? Well, there's something called the Bank for International Settlements, and I highly recommend you read The Tower of Basel, which is all about this bank. It's the shadowy history and the secret bank that runs the world. So this bank was created in 1930 via a treaty related to the League of Nations. And the people who own this bank, it's not a state or public bank. The people who own it are all the major central banks in Europe and in the United States as well. The Bank of England, the ECB indirectly owns it through the Bundesbank, the Bank of France, Bank of Italy, the Bank of Belgium. And they have an office in Hong Kong. And why am I talking about Hong Kong? Well, because that's when the market opens here in Europe at 11 p.m. or 6 p.m. in New York on a Sunday. The Asian markets are opening. And have I got proof that Mrs. Lagarde and Mr. Bailey and other central bankers contacted the BIS over the weekend and said we need to tamp down on gold because our currencies are looking really bad. I mean, I spoke about how we're making new highs in gold and pounds and euros. Could they have called the BIS and asked them to intervene and how do you do that? Well, first you go for the currency. You sell the dollar and you buy some pounds and euros right on the open, which is really unusual, but central banks can do that. And then you go after the gold futures. That's how you do it. Or you can go into the foreign exchange market and sell gold forward, the leasing story. But all I think they're doing is throwing good money into bad money. The good money, of course, would be the gold that they lease to the bullion banks so they can smack gold and silver in the middle of the night on a weekend going into Monday. And probably in the week that's going to be quieter because of Thanksgiving. They're not going to be able to fight the trend. And the trend is for these currencies to keep debasing themselves. You might get an opportunity to go out today and buy gold in pounds and euros a bit cheaper and in dollars, but I don't think it's going to last very long. It's weird how they do this when people in the West are all asleep, and it's happened many, many times. It shows me that they're desperate. They're just trying to kind of control this collapse of their own currencies, and hopefully that will happen, because that would be the best thing that could happen to freedom, I would say, because things are getting really strange in Europe, in the US. It looks like you guys have kind of maybe done the right thing by electing Trump, even though, you know, I'm not convinced 100%. I think he's a lot better, of course, than what we've had. But some people are even talking about some of the picks that he's been making that don't really bode too well, like the Surgeon General and some other people. But let's give him the benefit of the doubt for now. The petition here in the UK for a general election is up to 1.88 million signatures. We'll see if that results in anything, but it just goes to show that people are unhappy with the authoritarian government that we have here in the UK, who hasn't only clamped down on people who are just concerned about things, but they're also seem to be determined to destroy our economy so that globalist companies like BlackRock and others can buy a lot of the assets of this country for pennies on the dollar, and that's a shame, I would say. So that's what I've got to say today. Let's quickly look at the markets. It's 8:37 a.m. London time. As I said, gold has been hammered, but we're still way above the lows that we've seen recently, of course. We're like $130 above the lows. It's down $47 right now at $26.69. Low's been 58. The high's been 21. And it's really strange as well, because on Friday we had a really strong rally, and we also saw a really strong rally right on the close, which was unusual late on Friday. But what I think this does here, it helps the bullion banks cover their shorts. This is what they're probably doing right here. Silver's down 58 cents at 30.75. The low has been 30.50 and the high 31.50. The Dow futures is up 273 points, so that melt up continues. The Nasdaq 100 futures is down 109 points, and the S&P is trading back up towards 6,000. It's at 59.94, up 28 points. Yes, the currencies are a little stronger versus the dollar, but they've come off the highs, as I said earlier. And in the commodities complex, we've got WTI crude down about 7/8% at 70.59. We've got high-grade copper up 0.5% at 4.15. And natural gas, actually, the U.S. nat gas futures is up almost 6%. So that's interesting there. The 10-year Treasury yield is down 7 basis points at 4.34. And the 10-year gilt yield, that's at 4.41. It's up 2 basis points. So with that, I'm going to wish you all a very good day. Take care. Bye.